On this episode in our Crowdcreate Insight series, I'm joined by Brian Estes, the CIO and managing partner of Off the Chain Capital, an investment fund targeting alternative value investments in the digital assets and blockchain projects. Brian is a legend in the crypto sphere and is often called the Bitcoin OG. Founded in 2016, using a Warren Buffett style for finding deeply discounted investment opportunities, Off the Chain Capital is now one of the best performing funds in the space. You'll hear Brian break down his investment thesis and where he sees mispriced digital asset opportunities thriving in the market. Whether you're just getting into crypto, looking for insights from one of the top crypto investment funds in the world, or why Off the Chain Capital is the world's largest buyer of Mt. Gox bankruptcy claims, this interview is definitely worth listening to.
A lot of people are just wondering, and given your background, how do projects get a hold of crypto investors and one of them being you? Do you have any insights that you can share about this?
Yeah, so we're a value investor in the blockchain space. So we're looking for secondary market transactions with blockchain companies, or we're looking for mispriced digital assets. So for new developers coming into the space needing funding, like Off the Chain isn't the right platform for that. But I invested in the general partnership at Polychain Capital back in 2016. I work with the team there, and that's what Polychain does. So Polychain, they invest in new startups, help developers build their platform, find talent, help fund that project. And, so Polychain, Paradigm, A16Z, Pantera Capital, those are actually better platforms to help find funding than Off the Chain is.
Yeah, I also saw just recently, things like OpenSea on their most recent round with their massive valuation. But right. OpenSea, I mean, that's an example of one that's not necessarily a startup. They're kind of this undervalued asset that it's on the cutting edge. So how does something like OpenSea or someone that fits into that category get a hold of you? How do they present this in the best light? Like, what are those indicators that you're looking for?
Yeah, so what we're looking for are, like I said, mispriced digital assets or undervalued blockchain opportunities. So typically we're investing in A round or later companies or protocols. We're looking for companies that are cash flow positive and have little or no debt. And we're looking for like forced and motivated sellers. So a typical investment that we make are from early seed investors or early employees that need liquidity. And so, for example, we own about 7% of BitPay today. BitPay is the oldest surviving blockchain company. It's been around for 10 years. We've been accumulating shares over the past 8 or 9 months, and we're buying shares from the early family and friends that funded the company 10 years ago. So they invested at a stock price of 43 cents. We're paying $4.30 per share. So they're making 10 times their money over 10 years. And then we're getting into the company, this company is, very well established. They have 90% market share. They have $200 million of Bitcoin, Ethereum, and other crypto on their balance sheet. And we're paying a $375 million valuation for the company. So if you subtract out the 200 million of assets, we're really only paying $175 million for this company. And in our opinion, the company is worth more than $1 billion. And so, so that's what we look for. Another thing that we look for are mispriced digital assets. So we're one of the largest buyers in the world of Mt. Gox bankruptcy claims.
Wow,
so
I had no idea.
So Mt. Gox was the largest custodian of Bitcoin in 2014. The company had to file for bankruptcy, but they recovered 141,000 Bitcoin. And so if you had Bitcoin at Mt. Gox, you have a bankruptcy claim on the 141,000 or 141,000 Bitcoin there. And so it's been 7 years. People need liquidity every once in a while. They either, getting married, getting divorced, having a baby, buying a new house, wreck their car, they need a new car, and they need to sell these illiquid assets. And so by buying these Mt. Gox bankruptcy claims, we're able to actually buy Bitcoin for about a 60% discount than buying it like at Coinbase or PayPal or Gemini. So it gets us a discount on Bitcoin. So that's a mispriced digital asset. So that's what we're looking for, are these special, unique opportunities to get exposure to blockchain equity or digital assets at a discount.
How do you come across those opportunities? Because what you're describing, the everyday investor, especially when more and more people are trying to get into Bitcoin, it's like those methods of acquiring crypto assets. It's not like, how does your firm come across these?
It's hard work. Yeah. So I've been in the space for 7 years. Our head trader, Jeremy, he's been in the space since 2012, even longer than I have. Our COO, he's been in the space since 2012, Brian Dixon. He's wrote several books about Bitcoin and cryptocurrency. So we basically use our network, and we're knocking on a lot of doors. For the Mt. Gox bankruptcy claims directly, we have a team in London and New York that go out and they contact people who have these claims, and they're sending emails, sending written letters. They're not knocking on doors, but basically
digital doors.
Digital doors, and just saying, hey, if you need liquidity, let us know, and we're willing to bid on these illiquid claims that you have. And so BitPay, that came through. The original shares came from one of the early seed investors that I know. We also own equity in Digital Currency Group, which owns Grayscale funds.
Yep.
So Grayscale is the largest asset manager in the digital space. They have about $30 billion under management. We've had DCG in the portfolio for 2 years. Personally, I've been an investor in DCG since 2015. And so, we buy from, employees or early seed investors at DCG. We have Kraken in the portfolio that we bought.
Wow, that's a massive win.
Yeah, we own 1.25 million shares of Kraken. Our average cost is $1.5 billion in valuation, and Kraken trades pretty actively between a 10 and a $15 billion valuation today, and we just bought that less than a year ago.
Wow.
So that's we're looking for these special, unique opportunities to get us exposure at a discount.
So it really sounds like those, just finding those deals and opportunities kind of come through your immediate network of the people you either work with.
Yeah. Mm-hmm. Yeah.
What are some other indicators that you use? Because I know a lot of companies, they'll look for, I guess the everyday investor also looks for this, but let's say like indicators through social media or the coverage, or let's say YouTube influencers who, that's their full-time job, is uncovering these opportunities too.
Yeah, I wish we could use those, but we're registered with the SEC as a registered investment advisor. So we have to be very careful with our digital footprint and using social media to find deals or to sell some of our equity. So having said that, it's all word of mouth or private networks that we work through to find these special opportunities.
You've been in that space for a long time. I've been looking into some of your history, and yeah, you've been definitely on the investment front, helping these these larger institutions manage capital. And I remember reading that you discovered it in 2014. You kind of saw it by the Winklevoss brothers on CNBC, right. And it kind of opened that spark for you. Now that we're 2021, like looking back on that, what are your thoughts? Were you spot on? Is this what are your thoughts on that?
When I first learned about Bitcoin, I saw, like you said, Tyler and Cameron on CNBC talking about Bitcoin when it was $100 per coin. Coming from traditional finance, I thought it was like a scam. I was like, what are these guys talking about? This internet funny money. I just thought for sure it was some sort of like pump and dump scheme. And so I started just following Bitcoin, just the price. I didn't take the time to dive into it. And I watched the price go from 100 all the way up to 1200. Then Mt. Gox got hacked. And then the price crashed down to about 300. And when it got down to 300, being a value investor, I decided, well, let me take a look and figure this thing out, because maybe there's some value opportunity there, with Bitcoin being down 70%. And so as soon as I read the Satoshi Nakamoto white paper, I understood what Bitcoin was. I understood how we were going to rebuild our entire financial system on blockchain technology. And I come from a computer science background. I was one of those, like teenage nerdy kids that started coding when I was 14.
Oh, wow.
And I self-taught, myself. I have multiple software patents. I used to code for the Air Force when I was in high school.
Wow, that's awesome.
So I had this computer science background, but when I went to college, this was pre-internet. I was in college from 86 to 1990, and I didn't think there was a future in computers. And so I became a finance major. And so basically what I've done is I've taken that early computer science background and knowledge and combined it with finance. And I just understood. As soon as I read it, I was like, oh, I understand what this means and what the future is going to be. And I talked to my wife into allowing me to sell our financial practice. I sold that to Wells Fargo Advisors, and then I took our capital and became a venture capitalist in the blockchain space back in 2014 and 15, and made early investments in my digital currency group, Coinbase back then. I helped seed a company called Polychain Capital, and I just started making these private investments in companies. And then 2 years ago, we decided to take our family office investment fund off the chain capital and open it up to outside investors. And that's what we've been doing the last 2 years. It's my family fund. I'm the largest investor in the fund, and we just allow people to come in and co-invest with what we're doing already. And if you look at the performance of the fund, it's the #1 performing blockchain fund over the past 3 and 4 years. And that's because we have this value tent. We're looking for, like I said, these special, unique opportunities.
Wow. And I know a lot of the common talk around fund managers is who has beat Bitcoin and who's done
there's
it before.
There's two funds. Polychain Fund 1 and Off the Chain Capital are the only two funds I know of that have outperformed Bitcoin over the last 4 years.
That's fascinating, and it's both of the ones that you're directly involved with. Brian, you're really a smart and forefront thinker. It's what's interesting is I just interviewed Miko Matsumura yesterday from Gumi Ventures, and it's funny because both you and him said the same thing. It's like you guys read the white paper, the one written by Satoshi, and you got it. And it was because you had a technical background. It just made sense. And it's just so funny because hearing the way you described it is almost the same way that Miko described it. It just clicked. And it's like, hey, this is the future.
Yeah. Well, I used to code in like those ancient languages like Fortran and Pascal. And I knew our banking system was built on like those languages. And these are languages we've been using for 50 or 60 years. And I just understood that blockchain technology was going to replace all that. And what the internet was missing when it was built back in the early 90s was a protocol that allowed us to send value through the internet peer-to-peer. We had protocols like SMTP, which is email, that allows us to send data through the internet, right? And we had like DNS, for domain names, but we didn't have a open source internet protocol that allowed us to send value, and no one could figure that out. Mark Andreessen tried figuring that out with Netscape.
Yep.
Peter Thiel and Elon Musk tried figuring that out in 1998 when they started PayPal. PayPal's original mission was to create Bitcoin. If you read what their original mission was, they wanted to create a currency that was independent from governments and central banks, and that couldn't be manipulated. And they tried to figure out, basically Bitcoin, and they couldn't figure that out either. And then it was, Satoshi Nakamoto who finally put the puzzle together and released the white paper. And in 2009, we had what was missing in the internet for 20 years. And that was this open source internet protocol software that allows us to send value. And it solved the problem that people were working on for the 20 years before that.
Oh wow, I didn't know the historical context of PayPal. That's fascinating that you kind of pieced it all together that way. But yeah,
Yeah, Peter Thiel, Elon Musk, and then another guy named Luke Nosek, and those three guys came together to, they actually combined two separate companies into one and created PayPal, but they had a similar mission. Their mission was to create something like Bitcoin, and they couldn't figure it out.
and here we are. It's been figured out, and the world is now coming to terms of
Yeah,
what
so
is the world
it's
with
interesting
Bitcoin.
too. If you look at PayPal, their stock's gone from like 80 up to 300, and that's because they've reformatted the company back into a blockchain company. Their DNA is Bitcoin and blockchain. They bought Venmo 5 years ago. Venmo is a blockchain-based application owned by PayPal today. And then, I guess it was probably 4 or 5 months ago, they started allowing purchases of Bitcoin, Ethereum, Bitcoin Cash, and Litecoin on their platform. So, PayPal is transforming themselves into a blockchain company. And that's what they started out as back in 1998. And that's what they're transforming into today.
Interesting. It's come a full circle.
Mm-hmm.
Wow, Brian, you have so much insight, and that kind of brings me back to my final topic I wanted to talk to you about. So, with PayPal opening up crypto, and now the everyday person can buy. They just go into their PayPal now; they can buy crypto. A lot of people are now getting into crypto assets. What would you say, like, to a beginner? How do I invest into Bitcoin, and why?
Yeah, so there's a couple different ways of doing it, depending on what your motive is. So if your motive is to control your own wealth and keep it, basically a sovereign individual, then you want to own Bitcoin directly and keep that on what's called a hard wallet, or cold storage wallet, like a Ledger, Trezor device, and I think it was Twitter, no, Square. Square is working on a new hardware platform too, hardware solution. So, if you're, like I said, if your goal is to self-custody your own money, then, you want to buy Bitcoin directly and do that through a, hard wallet, like a cold storage device. If your goal is to just participate and have portfolio diversification, you want to do it in probably a more like standardized way, or more like a safer way, because when you self-custody, you run the risk of screwing that up and then losing your Bitcoin. And there are studies out there that show there's probably between like 3 to 4 million Bitcoin that have been mismanaged, and people lost their keys. And wow. So that Bitcoin's inaccessible now. They basically lost all their money when they did that. So a more traditional route is you invest through a brokerage account. So if you have an account at like Schwab, Fidelity, E-Trade, Vanguard, TD Ameritrade, you could buy the Grayscale funds. So Grayscale has a fund called the Grayscale Bitcoin Trust. The symbol is GBTC, and you could invest in that directly through your brokerage account. And that fund is 100% exposed to Bitcoin. If you want to own Bitcoin directly, but keep it at a custodian, you could do that through Fidelity. If you have $1 million, they have $1 million minimum. If it's under $1 million, you can go to other companies like Coinbase or River Financial, or you could even go to PayPal. PayPal allows you to buy up to $100,000 per week in Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. The only one I'd recommend, though, would be Bitcoin.
And why is that?
So Bitcoin's the only proven protocol out there that's won its category. So I don't want to get too technical here, but there's two types of blockchains. There's proof of work blockchains and proof of stake blockchains. Ethereum is converting over from proof of work to proof of stake. After Ethereum does that, if you look at the value of all the proof of work blockchains that are remaining, the other proof of work blockchains are Bitcoin, Doge, Bitcoin Cash, Litecoin, Zcash, Monero. If you take the value of all the remaining proof of work blockchains, Bitcoin constitutes 88% of the value of all those. So Bitcoin won. The decision has been made. The world economy and the world
consensus,
the citizens consensus has said Bitcoin is the winner for proof of work. And proof of work basically means store of value. So, Bitcoin has won that category as the store of value blockchain. So it's in the process of replacing gold as the monetary layer of the world. And so it's going to take another, 5 to 10 years for that to happen. But eventually, Bitcoin will replace gold. And then it will go on to replace other assets like, negative yielding bonds, the bond market, potentially stocks, potentially, rare assets like the Hope Diamond or the Mona Lisa or, other scarce assets. And so Bitcoin's on this path to, becoming the scarcest asset on earth. The other proof of stake blockchains like Ethereum 2.0, Tezos, EOS, they're fighting it out. The decision hasn't been made on which one of those protocols are going to be the winner. And so in my opinion, there's too much risk with those protocols because only 1 out of 10 of those will survive. And maybe 1 out of 100 will survive. And so on a risk-adjusted basis, owning Bitcoin is the best thing to do. It's the winner for its category. We know Bitcoin will be around 100 years from now. And we can't say that for all the other protocols that are out there.
That's a well explained answer. And Brian, I can tell you've been asked that quite a bit.
Yeah.
No, that was great. And that definitely answers. We get so many questions like that. And it's always, I love the way you broke it down. Proof of work, proof of stake, and kind of Bitcoin has already established its dominance.
And most people try to overthink things. And I've run into this problem too. Maybe I could buy Bitcoin at a low price and sell it at a high price and trade it. And you can't do that. No one could outthink Bitcoin. And so you want to just do what the simplest solution is, just buy Bitcoin and hold it for the next 10 years and don't trade it. Don't sell it. Just buy and hold. And if you could do that, you're going to be, in my opinion, very, very successful. Over the past 11 years that Bitcoin's been around, it's averaged 239% per year on average. Some years it's up 1,000%, other years it's down 80%. But if you average all those years out, it's 239% per year. And occasionally it drops 30 to 50% in a very short time period. But that's the price that you pay to own an asset that's grown at over 200% a year. It's not, you don't get a free 200% a year. There's a cost of that. And that cost is the volatility. And if you could just hold it long enough, what happens is that time smooths out that volatility. That volatility smooths out over time. And so the longer you own it, the less volatile it looks.
Those are some great insights. And Brian, I really want to thank you for your time and getting to know you and having a chat. And really sharing that knowledge. It really puts things into perspective. And I know many of our listeners are, especially right now when there's so much volatility, that kind of outside larger picture perspective is kind of what the industry needs.
Well, thank you for having me. I appreciate it.
Yeah, Brian, thank you so much. And thank you for your time. I'm looking forward to having you at the next one.
Yeah, thank you.
Okay.
See you.
All right.
Bye.
Thanks, Brian. Okay, so I'll stop it there. But yeah, that was awesome. Thank you so much for that, Brian. I was reading a lot of things about you, and you've been in space for longer than most people have realized. So
I try to keep a very low profile because our kids were like in junior high and high school, and it's just just wanted, they're in college now, but wanted to stay out of the limelight. So
yeah, that's probably a good idea for the kids. I was kind of just a quick little chat, and this is going to be outside of it, but actually let me pause the recording. But so interesting that you mentioned just holding it, because I know a lot of people, they're putting like
recording
yield
stopped.
farming. They've been, there's a lot of these new DeFi yield farming, staking. It's kind of turning I don't know how to describe it, but like Binance has all of these staking, mechanisms, and people are starting
Right.
to look at crypto not as just an investment vehicle, but like
Mhm.
replacing residual income even. And
Right. Yeah. Yeah. And I agree with that DeFi platform premise that you just mentioned. In my opinion, it's just too early. So, and having said that, I have a third of my net worth managed at Polychain, and that's what Polychain does. I mean, they're invested heavily into DeFi. I don't have the expertise to pick the winners or the losers in that category. So I let Olaf and the team at Polychain do that for me. And then a third of my net worth is just in Bitcoin, just holding that. And the other third is in the off the chain value opportunities that we come across. But if you look at, DeFi, it has a lot of potential. But it's just very, very, you have to have that specialized knowledge to pick the winners. And for me, it's too early to be able to do that.
that's great. Okay. Good
And
insights.
we know Bitcoin's to be a winner. So, it's like I could, pick one of these 100 and maybe, I'll get it right and make more than Bitcoin.
Yeah.
Or I can just pick Bitcoin, and I just feel it's a lot safer just to buy Bitcoin.
Yeah. Me and my co-founder are in the same position. It's like, yeah, you can play around and spend a lot of time, or you just park it in like Bitcoin or Ethereum and just like, did you really beat the markets by kind of tossing it around between these yield farms, and
Right.
you have the impermanent
Yeah.
loss, and it's like, do you really know what's coming back to you? It's very new and nascent, so that's good.
One of the partners at A16Z told me that back in 2014. I was having breakfast with her, and I was trying to get into the Coinbase A round.
Oh yeah.
And I asked her, I was like, can you help me get into the A round? And she's like, why do you want to buy Coinbase? And I'm like, well, because it's a company and it has a lot of potential and reminds me of, the company I started my career at AG Edwards, which was a brokerage firm. And she's like, just buy Bitcoin. I'm like, well, like, won't you make more owning Coinbase? And she's like, no, like, you'll make more owning Bitcoin. Like, just buy Bitcoin and hold it. And I thought she was just trying to make me feel better.
Yeah.
Because I couldn't get into Coinbase. But I eventually got into it. And looking at my performance, if I would have taken her advice and just bought Bitcoin
At 2014?
In 2014 instead of Coinbase, I would have done a lot better with Bitcoin. And she said the reason that A16Z has to invest in Coinbase is because at the time they couldn't invest in Bitcoin. That would make them an asset manager, and they weren't an asset manager, they're a venture firm. So they have to fund new startup companies.
Wow.
And about a year and a half ago, A16Z registered with the SEC as an investment advisor. Now that they're an investment advisor, they could buy Bitcoin. They could buy Bitcoin directly.
How does she have the insight? That's fascinating that she had the insight in 2014.
Yeah. So I mean, that's and but I look at my investments, and I would have been so much better off just buying Bitcoin and holding it than doing what I did over the last 7 years.
Wow, that's fascinating. No, Brian, thank you so much. Like, it's just enjoyable just talking to someone that's been in the space for so long.